Hi there and welcome to this week's market update. Stick with us and get a jump on the trading week. This past week, markets were temporarily jolted by the Consumer Price Index, or CPI. The data revealed inflationary pressures remain persistent, with the CPI showing a higher-than-expected increase. This development raised concerns about the Federal Reserve's monetary policy, particularly about when the next round of rate cuts could be expected. At this point, it doesn't look like we can expect any further cuts in the near term. President Trump's Doge, with Elon Musk at the helm, continued their review of governmental departments and has already begun reducing expenditures, quoting a savings of $37.7 billion since January 20th, and has identified over $370 billion in savings focusing on redundant federal programs. The opposing political party is fighting this effort at every turn, but aside from a few likely baseless lawsuits and political stunts, it seems that this cost-cutting will continue in earnest. Sharp cuts in expenditures could have negative effects on the economy in the short term. However, these are likely to be targeted impacts directly on specific industries who are direct recipients. From a long-term perspective, if the overall government spend decreases, this has tremendous upside. Lower borrowings could lead to lower interest rates. Lower spending could lead to lower taxes, which is a direct positive to the economy. The Trump administration has implemented a series of tariffs aimed at addressing trade imbalances and protecting critical domestic industries. While some of these are already in place, it seems that others are largely negotiating tactics which can help drive concessions from the other parties, such as Mexico and Canada. The geopolitical landscape has also been active, with President Trump quickly taking action to bring about peace in the ongoing conflicts. Notably, Trump reportedly had a 90-minute phone call with Vladimir Putin discussing Ukraine, energy, and AI collaborations. The talks were productive, with Saudi Arabia preparing to host peace negotiations in the coming months. A close to this conflict will help bring about geopolitical stabilization and be a positive for the world economy. Middle East tensions remain high. The Israel-Hamas ceasefire remains fragile, with some exchange of hostages for prisoners. Additionally, Yemen's Houthi movement continues to threaten shipping in the Red Sea. While the economic impacts of this conflict are minimal, a widening of conflict in the region could have growing consequences. Some big stuff there to keep up with. This week there are a few economic reports due out, including Tuesday are the Empire State Manufacturing Index at 8:30 and the NAHB Housing Market Index at 10:30. Wednesday at 8:30 is the Housing Starts and Building Permits, and at 2 o'clock the release of the FOMC meeting minutes. Friday, the flash PMI data is expected at 9:45. The two reports that are potential market movers are the housing starts and the release of the FOMC. The housing report is expected to show a slowdown in housing starts. Since housing is a leading contributor to GDP, a greater than expected cooling could have market implications. Similarly, if the FOMC minutes indicate a stance on interest rates that is higher for longer, financial markets could be negatively affected. The earnings front is relatively quiet this week. Earnings are expected from Medtronic, symbol MDT, on Tuesday before the market opens. Alibaba, symbol BABA, and Walmart, symbol WMT, are expected Thursday before the market opens. From a fundamental growth perspective, the U.S. economy seems poised to continue its growth. In some ways, the prospects of reduced regulation and government spending can have a preemptive growth effect. With improved outlooks in these areas, companies and investors have a more optimistic outlook, and this can translate to additional investment and future economic growth. From the technical perspective, the markets showed strong resilience this past week. Both the S&P and Nasdaq broke through their respective sideways patterns to the upside. SPY breached the 606 level, touching an all-time high briefly on Friday. The pattern appears poised to continue its bullish movements to the upside in the coming weeks, with an initial target of 620. QQQ nearly reached its all-time high, also falling just short of the 539.15 level. Like SPY, the Nasdaq ETF breached its short-term resistance level above 531 and appears to be ready to continue its upward movements. The near-term target could be as high as 560 over the next several weeks. So all systems are go, with likely higher markets in the near term. That does it for now. We'd love to hear from you. Let me know what you think in the comments. If you found this material valuable, please like and subscribe to the channel. It's a big help. Thank you for watching. Until next time, good luck out there. As always, the information presented in this video is for educational purposes and should not be considered financial advice. Be sure to evaluate how this information and securities discussed align with your financial needs. Consult with a financial professional if needed.